Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market, the bulls are still in control. Daily higher low on SPY is now the low of Friday, so 269, make that 296.99 is now our line in the sand for this week's action. As long as that level holds, the bulls are in complete control. We double topped at 324 resistance, and we're looking like that level could be in play tomorrow. And if that breaks, it's just the all-time high. We are currently less than 1% from that all-time high. That is where the bulls are focused. And it's the burden of proof on the bears to lose or knock off the bulls from this daily uptrend. So we have the biggest event this week, in my opinion, is Microsoft earnings, as Microsoft is a major holding in the tech sector, and we know the tech sector's impact on the S&P 500. Second day in a row where it's the financial sector leading the way for the bulls. And when we were at the low of today on SPY and QQQ, XLF bulls held on and did not break their low, which let us know not to believe the market bears too much because XLF was holding on just fine. So on the hourly chart for SPY, anything above, you could say 299.41 is our hourly high or low. Hardly any consolidation there. I personally would say anything above the low of today was an hourly high or low. IWM, big time continuation. Again, not a great looking candlestick, but compared to where we closed on Friday, certainly a very strong candlestick. Hourly time frame, still in an uptrend. Our hourly high or low is 153.91. Holding that at the end of the day. If we break that level, it will be a high, low, lower high, and lower low. So we would lose the hourly uptrend, which means zoom out and look for a daily higher low to form with 151.45 as our most recent daily higher low. So again, some of these sectors are very much more likely to form a weekly lower high than others. IWM is still a long way from breaking its resistance over 3%, whereas SPY is less than 1%. So that's important when noting what we're looking at as far as each individual sector is concerned, because we can have some sectors break, we can have the S&P 500 break, we can have others not break, and if we're going to see another triple top now on SPY with the inability to see any follow through over that all-time high, in my opinion, it would require either QQQ or XLF staying in its equilibrium, and some of these other sectors forming weekly lower highs as well. So QQQ daily higher low is now 190.71. Daily inside bar today, but closing up at the high of the day. And the bulls want to break 194.50 to see continuation. Again, the most important level, or on the weekly time frames for most names, 194.71 is that resistance. So again, if SPY were to break bullish due to XLF and QQQ does not break bullish to all-time highs, then we have to take the bull break with a grain of salt. For me to be real convinced that the S&P 500 bulls can get follow through on their all-time high, I have to see QQQ and XLF both break their recent weekly resistances. So for XLF, bull flag on the daily confirmed. 28.67 is the highest price that we've seen in months, and that's the next level we're watching. And again, weekly resistance right there at 28.67 and 28.72. I have to see both of those levels break if we're going to be looking at the S&P 500 getting convincing follow-through on any new all-time high. And if we fail that resistance and lose the daily uptrend on these names, any of them, then the weekly equilibrium will continue. So again, I am a bull in this market as long as the S&P 500 is in a weekly uptrend. I've talked in the recent past about a good spot up here to hedge long-term portfolios with a stop if we see convincing all-time highs, or to make bearish entries. That's perfectly fine as well, even if you're not hedging, as long as we have stop levels, knowing we're playing counter the trend and knowing that the bulls currently have full control. XLV. So XLV is trying to form a daily higher low at 91.35. We don't have enough bull follow through to convincingly say that is our higher low at this point, but the bulls are hoping that this is a cup and handle type pattern with resistance, consolidation, inability to break resistance, and now a bull flag 92.43 is the most important short-term resistance level from here. It's a weekly lower high. If we cannot break that level, if we do break that level, it will give a lot more confidence for the bulls to eventually change the weekly trend once we can see a higher low and higher high. But 92.43 key short-term resistance. XBI is continuing its strength. Daily higher low is 77.79. We are looking for a weekly lower high, but that's a ways away at 84.12. And keeping an eye out for a bearish entry on XBI once the daily uptrend is lost for that weekly lower high to be set. The VIX is a potential daily bear flag. We're looking back down at our low and our base of support at 1330. And pretty much, if SPY sees a convincing all-time high, we're going to look for a bear break under that level on the VIX. And if we reject from the S&P 500 all-time high, we're going to be looking for the bulls to maintain this level of support and try and work off of that to get some more upside in the VIX. Gold, still tight. Again, I don't care what gold is doing as long as we are within this range. It's choppy and it's unclear to me. I have to see a break of one of these two levels for any kind of change in outlook on precious metals. Silver got a big bull move today compared to gold, but we could not break resistance. So again, it's choppy as anticipated as long as we are within these levels. So precious metals, more sideways action, miners with bearish action. So again, we're watching a midterm trade setup. That does not mean enter now. It means scout and plan your entry. We are looking for two things to indicate that this pattern is still alive. The first would be the bulls to hold the low of 26.18 and change the daily trend by holding that level and then breaking 27.35 for a daily trend change. The second would be a bear break under 26.18 straight into a green couple of days and another move of a bear break with no bear follow through straight into a bounce. What will negate this pattern for me is if we drop down and break $26 and see multiple red days in a row with no bounce, closing multiple days under this downtrending support line. So the trade is still in play. This red day definitely does not ruin this trade. We were just looking for a daily lower high to form on this bounce. How we play out from here into the end of the month is going to dictate whether this trade is still alive or not. Oil is in a tightening range. Let's see if it's more clear on the 12-hour chart, and I do like it a little bit more detailed. High, low, lower high, higher low. So 52.70 and 52.36 are our supports. 54.60, 54.91 are our resistances. We could stay within this range for another couple days, maybe even until the inventory report on Wednesday. If we break it bearish, the odds of a weekly bear flag increase a good bit. If we break it bullish, the odds of a weekly bear flag will decrease a bit. So 12-hour time frame equilibrium for clarity on oil. Natural gas, that's the bear break we wanted to see as far as keeping the inverse head and shoulders setup alive. We have a double top at the neckline. Now we're looking for the daily higher low to form compared to 217.8. There was a nice bottom fishing play today where we had the low of the dump, high of the bounce, double bottom, lower high, higher low, and then we just ended up trading sideways, a little bit of a bull fade at the end of the day, but a nice bottom fishing play off of this support level for some decent short-term day trade gains. What we need to see is a 4-hour trend change back to the bulls. On this bounce, we're just going to be looking for a 4-hour lower high to form. We're going to have to top out, set a higher low, and then a higher high to change the 4-hour trend and give us our daily higher low to then be looking back up at the right shoulder forming and our neckline of resistance 2376 and 2384. So that's the setup on what we're looking for on natural gas. So midterm trade setups on both natural gas and the bull miners. Just keeping one eye on them this week. And the S&P 500 bulls in complete control. Again, one of the lowest volume days of the year. We pointed out many times the bulls do not need volume to go up. The bears do need volume to go down. It's not a fair game. That's just the way that it is. That's the way that I've been observing it for the past 2.5 years. And until that changes, we're going to have that as a guide. So all about 296.99. As long as the daily higher lows on these major sectors and markets remain intact, the bulls are in complete control. Hope you have a good rest of your day. Hope you had a great morning. Hope you have a good afternoon. Have a good evening and night. And then have a good morning tomorrow.